Hey guys, it's that Dividend guy coming at you with an AT&T news update. So, AT&T has agreed to merge media businesses with Discovery. So, AT&T Inc. and Discovery Inc. reached a deal to combine their media assets into a new publicly traded company, unwinding the telecom company's big bet on entertainment after less than 3 years. The new business, which isn't named yet, will be led by current Discovery chief executive David Zaslav. The company said Jason Killer will retain his title as CEO of AT&T's Warner Media division, but declined to say whether he would remain with the newly combined company after it secures regulatory approval. Shares of AT&T, we don't need to know about that. It's saying what happened today. AT&T's chief executive said in an online news conference Monday that he had been contemplating the structure of our business for some time and eventually decided that pairing with Zulov's company would benefit both parties. It's a longtime friend of Warner Media executive and CNN boss Jeff Zucker, and said the transaction came together over several months of talks, included chats in the Discovery chief's Greenwich Village brownstone. The combined entities spent $20 billion on content, a level that tops Netflix recent programming budget. Warner Media owns cable channels such as HBO, CNN, TNT, and TBS, as well as Warner Bros. Television and Film Studio. Discovery has a portfolio that includes its namesake network and HGTV. Both companies also offer streaming video portals that compete with larger on-demand services like Netflix and Walt Disney. The two CEOs declined the detail of their long-term plans for HBO Max and Discovery Plus, which could remain separate or be combined into an even larger online video library. You gotta have content people love so much that they'd run home and pay for it before they pay for dinner, said on a call with investors. Under the deal, AT&T shareholders will hold a 71% stake in the new entity, while Discovery shareholders own a 29% stake. In exchange, AT&T said it would receive $43 billion in cash, debt securities, and Warner Media's retention of certain debt. AT&T also said it will cut its dividend to reflect its smaller size once the media business is carved out into a separate company. The Dallas company said that expects the annual dividend payout ratio of 40 to 43% for more than $20 billion of expected free cash flow, implying the total payout between $8 billion and $8.6 billion. That payment to shareholders would amount to little over half what the investors have collected from the media and telecom conglomerate in the past years. So, this just talks about all the stuff they went through and how they spun off from DirecTV. I've read the article. But so what's going on is AT&T is combining its media assets with Discovery to build another separate entity. So what this means is if you own AT&T, we're going to get a dividend cut, which is not surprising. A lot of times when companies do this, they do cut the dividend because, of course, their assets are being cut, so they're not going to have as much profitability, and they may not be able to sustain that dividend with that profit loss, so it makes sense. But the thing is, I have read multiple news reports on AT&T talking about how they were so excited about HBO Max and the growth that it was going to be giving them in that streaming service, but I guess they just felt like they couldn't compete with Netflix and Disney Plus in that space, and that they needed more content to truly be competitive, which I disagree. I mean, if you look at Warner Media, in my opinion, I think right behind Disney, they have the best content. I mean, they have Cartoon Network, they have Adult Swim, they have anything Warner Bros. So I believe they have, I know they've got Friends, I know they have Ballers on HBO. That was a big show. Big Bang Theory. Like, they've got a lot of more adult friendly content that Disney's just lacking. So I kind of felt like Warner was kind of set up to be the second big player when it comes to streaming, but I guess they felt like they didn't have enough compelling content to maybe switch users from Disney to Warner, which I kind of get. So what's really happening here is AT&T is cutting out its media business of Warner Media, which I know it's been a few years, but it does suck for AT&T investors, because I know a lot of people bought AT&T specifically for this Warner, this Warner acquisition, and the dividend. So both of those things are going to be cut out. So we're getting rid of Warner Media, which it's taking a lot of its debt with it. A lot of AT&T's debt issue came with that acquisition because Warner was logged with debt when AT&T did the acquisition. So a lot of the stress that's been put on the balance sheet for AT&T as a company came with that Warner acquisition. So it's kind of up to, shareholders. Do you guys think that that was a good idea? I was for it. I liked AT&T acquiring that company because I liked the content that they had. But I think it just put too much strain on the business, and I think they were forced to just cut it because they felt like it wasn't bringing in enough revenue. But the good thing that will come of this is a brand new company, which AT&T will have majority stake in. So the thing that I'm not sure of yet is I know that it's going to be a separate company. I know it's going to affect the profitability of AT&T, so it's going to be a pure telecom play now, which I think it's going to benefit the company long term. But what I don't know yet, because it doesn't actually say in the article, it gives us the split, which would be, of course, Warner's leaving. And then it gives us also the split of what we're going to own. It doesn't name the new company, but AT&T shareholders, I believe it's going to be something like the new Pfizer spinoff. I think that's what we're going to get as AT&T shareholders. I think everybody that owns Discovery will be getting this new company. I think it will technically kind of do exactly. I think Discovery will just be this new company, and I think that the part of AT&T that's being cut out, which is Warner Media, I think we're going to get a transfer in value, as in 40% of AT&T, the share count I think will be transferred into this new company. So I think we're just going to get kind of like what we did with Viatris with Pfizer shareholders. When they got the new Viatris shares, they just kind of spun off. Like nothing really happened to Pfizer because they didn't cut their dividend. But normally when you cut a piece of the business out, you can expect a dividend cut. So I don't know what that's going to do for their status as a dividend aristocrat because they've yet to increase the dividend. But I don't know if a split is going to, like a company split, is going to affect their status. I'm not sure about that. I'm not sure how that works. But as far as I know right now, which I'll do a follow-up video, of course, because it's one of my companies and I love AT&T. But for what I know right now is AT&T shareholders do have a majority stake in this new unnamed company. I know we're going to get a dividend cut, which is expected. But I did the math on so we have a 58% payout ratio right now. AT&T shareholders do, so it's about 60%. But I think with the debt being taken off of the balance sheet, and I calculated what I did was we're getting a 52-cent dividend now, right? So we're going to lose about 20% of our 20% of the payout ratio. So it's going to be cut out. So the dividend's pretty much going to be cut by 20%. Sorry. So it's going to go from 60% to around 43% to 40%. So the math I did was 60%, which is a little higher. It's 58, but I rounded up. So 60% cut to 40%. So I times 52 cents times the about 18% of what we're going to be getting. So we're looking at about a 42-cent dividend is what I did. So according to this article, it said we can expect like a dividend cut of half, but I don't think that's happening. According to the math I did on the payout ratio, which it might actually change. Sorry, I was telling my friend about it. He's an AT&T shareholder as well. The math that I did, we come out to a 42-cent dividend. But don't hold that as like, truth yet, because we don't know. We have to wait for them to kind of give us exactly the specs on what the dividend's going to be. But as for right now, what the current payout ratio is on the announcement is about 60%, which they're going to cut it to 40. So it's about a 20% dividend reduction, which ends up being around 40 to 42 cents. So I plan, I'll do a video on what I plan on doing with it, with the AT&T shares tomorrow. I just wanted to get the news out. So right now, as far as I know, AT&T is merging with Discover, but AT&T's using Warner Media to take the debt load off of AT&T. It's going to be a pure telecom play. We're getting a new company which will merge Warner and Discovery. And I believe we will be getting shares of that new company. The dividend will be cut, but it won't be. I don't believe it will be substantial. But I'll let you guys know, as more news comes out. This just happened today, so good news, I think, for AT&T shareholders. I would take this as a good thing. We're getting rid of the debt that we had to incur to get the Warner assets, and honestly, I just don't think that, as much as I loved the Warner Media content, I don't think it was worth the debt that AT&T had to take on. Honestly, I don't think it was. But that'll be it for the update. So we're getting a debt reduction, we're getting a dividend reduction, but we're getting a new company for that, and I think that will help long term. So anyways, thank you guys so much for watching. Tomorrow I plan on doing a video on what I plan on doing with my AT&T shares. I'm kind of just gonna let it sit in. Let the news kind of sit and reevaluate the position as a pure telecom play. Honestly, I did buy AT&T originally because of how good of a deal it was when the Warner deal was announced, but I'll let you guys know what I plan on doing with my AT&T shares tomorrow. So payout ratio is going down, dividends being cut, new company is going to be birthed out of this merger, and we'll see what happens with the news when it comes out. But anyways, guys, thank you so much for watching. Remember to hit the subscribe button. When you do hit the bell notification, I post Robinhood portfolio updates Monday through Friday. I also do news videos, list videos, just stock market news in general. So AT&T, I think, is going to be, I think this is the right move. So let me know what you guys think in the comments down below. Let me know what you plan on doing with your shares. I'll let you guys know tomorrow. Thank you guys so much for watching. Remember to tune in tomorrow to see what I plan on doing with my AT&T shares. Take care, guys.